Greetings and salutations. Today is November 7th, 2022. Let me start by saying I'm not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. This will be a particularly short video. If you've seen my videos before, you know that they have links to a whole lot of other things. This will just be a single topic, and it's about triggering waterfall sell-offs. And let's get started. Again, this is about stock symbol MMTLP. If you don't know what MMTLP is, there were some oil and gas assets that were for sale, essentially, in Texas, in a place called the Orogrande Basin. They were basically, these assets are owned by a company called Torchlight Energy. They merged with another company called MMAT, and they provided Series A preferred shares to the original Torchlight shareholders so that they could still have access to this oil and gas assets. We're talking about 3.2 billion barrels of oil in the ground and a bunch of natural gas. It's 49% revenue interest. It's near El Paso. It's near El Paso, Texas. In El Paso, Texas, there's a Marathon refinery there. You don't need a federal lease to get this oil and gas. It's what's called private land in Texas, so it's pretty cool. Anyway, these MMTLP shares will get you access to a company they're spinning out with the oil and gas assets called NextBridge Hydrocarbons. So that's what MMTLP is. So we saw this tweet today by Paul T, who talked about two short attacks this afternoon. We dipped below $7 for a single reason. Stop losses were triggered. For the love of God, people, please remove your stop losses. There's no need for stop losses on MMTLP. This is a special play. So, yeah, that's what Paul T said. If you know what stop losses are, you know what he's talking about, and you know what's going on. If you don't, maybe I'll help to decode this for you. Maybe you have stop losses in there and you still don't know what's going on. We don't know. Anyway, stop losses are generally considered a conservative thing to do. They've been promoted by many people as being a safe way to invest in stocks and stuff like that. Basically, a stop loss order, it adjusts it's basically automatic selling if the price drops below a certain point. That point being what's known as your trailing stop. If the price drops, greater than 10%, you might trigger a stop loss order, for instance, right? So it's generally considered to be, for the most part, by most people, to be a very conservative strategy. It's generally considered to be, a good thing to have because it will limit your losses, right? You may not have 100% loss. You may only lose 10% if the stock price suddenly starts plummeting, right? But there's a note in here from Fidelity. They say trailing stop loss orders may have increased risks due to their reliance on trigger pricing, which may be compounded in periods of market volatility, as well as market data and other internal and external system factors. That's a very interesting thing to note. They put a disclaimer in there, and that disclaimer is valuable. It's there for a reason. Okay. Generally, what are stop loss orders? This is Investopedia. Investopedia basically says, a stop loss order is used by traders to limit their loss or lock in a particular profit on an existing position, right? Traders can control their exposure to risk by placing a stop loss order. So you would think stop loss orders are good, right? And in general, they're great for things, I believe, like index funds, like the S&P 500, right? If it starts going down, you want to put a stop loss order in there. Limit your loss on the S&P 500. That's what you do. But it's terrible for individual stocks that have active shorts. Let me explain why. Okay. If you don't know what short selling is when a person or individual or fund, they sell stock that they don't actually own. They hope to buy it back later at a cheaper price and make money on the difference, right? So, how can you sell stock you don't own? That's a different story. We'll get into that later. But these people have the superpower and ability to sell stock that they don't own, and they can buy it back later they intend to buy it back later at a cheaper price after the price has dropped, right? And of course, make money on the difference. Now, in modern times, we've seen what's called abusive short selling and things like that. Generally, this follows something like this. There's this thing called a short and distort. Basically, what happens is that, a particular trader, person, or institution, they might, or hedge fund or something, they might take a short position in a stock. once they've got their short position established, right? They've sold the shares. Then they spread negative rumors about the company, about the stock, about the management, all sorts of things, right? And, who knows? It causes people to experience FUD, fear, uncertainty, and doubt about that stock. Maybe they'll start selling their stock. The intent is that, after people have sold their stock based upon all this fear, uncertainty, and doubt that's been created out there, that the price of the stock would drop, and these short sellers would make money on the stock price. They'd make money on the stock after the stock price collapses. That is one of the methodologies they used. Another methodology they use is to trigger a waterfall sell-off, and this is pretty common. What a waterfall sell-off is that you short a stock, right? And by shorting the stock, you sell stock you don't own, right? And that means that bids get triggered, right? If you do a market sell, you'll hit the bid, and you'll drive down the stock price, right, to that bid price. And you continue to short sell, hitting the bid all the time, until people's stop loss price has been triggered. Once you get to that stop loss price, then other people will be automatically selling their prices and forcing the prices even down lower, right? That's why it's called a waterfall. It just, one thing triggers the next thing, which triggers the next thing, right? Other people's selling will trigger more and more stop losses. So stop losses get triggered after stop losses. That's the intent of a waterfall sell-off. What does this look like? Well, this is today's stock price action from a tweet that I made a little bit earlier. Tony's Twits is my Twitter handle, by the way. So if we look at, let's see, hopefully you can see my mouse. If we look at this particular point in time here, we see that shorts attacked and the price dropped particularly low. In fact, the price went below $7. And when that happened, you had some stop loss orders that were automatically triggered. Because a lot of people said, hey, look, if the price drops below $7, I want out. I don't know enough about the stock. I just want out, right? So the stop loss orders get triggered here around $7 and below, and you get continued sell-offs. Ton of sell-offs here. Now, what happened later on? Of course, we have a lot of people who are very intelligent about MMTLP. We know what's going on. So we had what's called BTFD, buying the fine dip. People bought the dip back, and the price, of course, recovered. Because we know that short attacks happen. We know that they were trying to trigger a waterfall sell-off, and a lot of people basically said, hey, look, I'm going to take advantage of those discounted prices. But basically, this is what Paul T is trying to say. He said we had two short attacks, dip below $7 for a single reason. Stop losses are triggered. For the love of God, people, remove your stop losses. Now, he's saying this because if you have a stop loss in there, you've now sold at a loss. You won't be getting back. So let's go back. If your stop loss, if you bought at, say, 7.30 and you have a stop loss triggered at 7, now the stock price went down. Your stop loss got triggered at $7. You sold. It went even further down. You didn't buy back in, of course, because you had a stop loss, right? And you just sold. And as a result, you had an automatic loss of 30 cents a share, right? Did you buy back in? Probably not, because you weren't thinking about it. You're probably saying, hey, I'm brand new to this. I just want to protect myself from unlimited losses. Well, you don't have to worry about that, is what Paul T is saying. Paul T is saying, he's actually trying to help you not to lose money, right? He's saying he doesn't want you to lose money, because if your stop loss gets triggered, that's probably means that you're losing money. And you should understand what the other side of the trade is doing, right? The other side of the trade are these short hedge funds. And that's basically their play. That's how they make money, right? They manipulate your emotions. They manipulate you into selling your stock, maybe even triggering the automatic sells that you have, right? Anyway, that's the end of this video. If you are brand new to MMTLP and you want to learn more about MMTLP, I recommend you check out this one video called 1 Year of Trading on the OTC Markets. There are links there that provide you with links to all sorts of takes on MMTLP. It's a really good video. Check it out. And again, let me end this video by saying that I'm not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. It is November 7th, 2022. Have a good day. Goodbye.